everyone. Welcome back to the Daily Gold Podcast. With me today is Dave Skarica of AddictedToProfits.net. Hey, Dave, a lot of stuff going on in the markets. We've got the Fed meeting coming up tomorrow and Wednesday. What do you think the Federal Reserve is going to do? Is there any magic tool or magic bullet Bernanke can use to get everything back on track?
No, I really don't think so this time around. Now, obviously, we could continue to get a short-term rally if Bernanke announces some form of QE3 or some kind of easing, or purchases or whatever. But I think there's a problem is twofold. If you look at what the economy has done, especially in the second quarter when QE2 was still going over, it's obvious that didn't really have an effect, a positive effect, other than making maybe equity markets go up. And secondly, I think really a lot of the market is dependent on what's going on in Greece and a lot of the Eurozone right now. I've always called the Euro crisis kind of the non-crisis. Usually I tend to agree with like George Soros, but I actually disagree with him in this respect that, this could be worse than Lehman and all that sort of thing. I think that, we're worried about really small countries in Europe. And we're focusing on like the equivalent would be like if New Hampshire and Rhode Island and Maine went down in the States. No one would really think that would bring down the country. So I just think it's like the wrong focus. But until this thing gets sorted out with Greece and with their 10-year bond yielding 23% and their 2-year bond yielding 60%, they're not really fooling anybody at this point. So some sort of structured default should be welcomed. And then I think you can see a rally in the equity markets. But I think we're to kind of get a little on a different frame of mind is look at the CCI, look at the commodities. These things have held up really, really well during this consolidation since about April, May. And that tells me that when we do see some kind of QE or the Fed does loosen, commodities are going to lead the way, I think, this time around. The fact that everyone was calling commodities a bubble, but the CCI is now trading at 634, and the high was 691. So we're not even 10% off our high, despite all kind of the problems we've seen in markets. I think that really bodes well. If they do some kind of form of loosening, you could see commodities really, really move. I think a lot of the money that's printed will go into commodities the next time around.
Yeah, that's a good point about the CCI. I mean, it's really only, I'm looking at it here, it's not even more than 10% off its high. It's held up very well. Dave, let's turn to our favorite subject, precious metals. And, I'm a bit surprised because you go back to the end of last week, it looks like we made a bullish hammer on the stocks on a Thursday, that is. Friday, we had really nice follow-through. A little weakness today. I mean, the market's going to close in about 12 minutes here. The gold stocks in the junior gold stocks, GDXJ, they have recovered some of their losses. So, I mean, that's encouraging to me. What's your take on the gold stocks? Because I was pretty bullish coming into this week. Maybe a little concerned with today's weakness, but I mean, is it possible that we could, after the Fed meeting, we could, rally higher to new highs?
Yeah, when I look at the gold stocks, I actually think today's action is quite constructive. There was actually even a Wall Street Journal article about how the gold stocks, I saw in Yahoo Finance this morning, about how the gold stocks were cheap, in terms of price to earnings and virtually every other metric. So, and we've both known that for a long time. So you look at a day like today when gold is down over $30 or say roughly almost, 1.5% to 2%, but the stock's only down about 0.5%. I think that's quite constructive and a sign that hopefully at some point here the gold stocks are really going to lead going forward. I've still kept my neutral tone on the gold stocks because I still think we need the consolidation in the price of gold itself. But I think by within the next month, by middle to end of October, we can really see the gold stocks beginning to move higher and into the traditional fourth quarter rally. So we still might see some backing and filling here, but I would expect them to A, outperform gold in the short term, and then B, really begin to move higher, I would say, by the end of November at the latest.
Yeah, I mean, the gold stocks, I mean, relatively speaking, you look at the weakness that we've had in the stock market the last couple months, and then gold and silver have been consolidating. Um, yeah, excuse me. Yeah, the metals have been consolidating, kind of having light corrections here, but the stocks have held up really, really well. And particularly, I think, let's turn our attention to silver, Dave, because looking at silver, I think it's down below 40 today, or just below 40. Silver that's more than 10. That's about $10 off its high. Yet, if you look at some, well, they're not juniors anymore, but some kind of medium-sized silver stocks like. Look at Fortuna Silver. That's one both you and I have recommended for a while. Fortuna Silver is basically trading at its high from earlier in the year. I mean, look at Endeavor Silver, which is EXK. That is basically trading at what it was trading at in April when silver was at 49. There's some other silver stocks which have also held up very, very well. I mean, that to me is very encouraging, considering that silver would have to rise about 25% just to get back to its high. Yet, you see a lot of these quality silver stocks are basically trading at their highs. I mean, that's really encouraging to
Yeah,
me.
and
What do you think?
I think it's the reverse of what we talked about in the spring when we were speaking. We were both talking about the weakness the silver stocks were seeing in the March-April period, even though silver was zooming up to almost $50 an ounce. So I think now you've got silver still in kind of this consolidation mode between roughly 33 to $35 an ounce on the downside and about 42 to $45 ounce on the upside, and we're right in the middle of that consolidation range. But the silver stocks are acting very well. So I think that could be a leading indicator. Remember, the silver stocks never got priced for $50 silver, and maybe not even $40 silver. So I think the fact that they're leading bodes well for silver going forward. And I think another point I'd like to make is that I really believe that the equities in both gold and silver are kind of the better place to be right now, rather than the actual physical metal themselves. Now, that's maybe a bit of a bold statement because we've seen roughly a year or two where the physical metals have outperformed. But I think at some point we're going to see these equities play catch-up ball and really, really begin to outperform the metals themselves. And I think the silver stocks are hopefully leading the way and will continue.
Yeah, just my last thought here. The gold and silver stocks, they've held up very well. They're showing good relative strength. And this is at a time when the metals are consolidating. I mean, Dave, what happens when the metals finish their consolidation? They begin another leg higher. Couple that with stocks that have already shown a lot of strength. I mean, you could really see, some big moves, I think, in these stocks in the next 3 to 6 months. What do you think about that idea?
No, I agree with you. I think you look at the stock market, you look at the investors' intelligence readings, which now have more bears than bulls for the first time since the summer of 2010, which of course was an important bottom for the stock market. You got the high VIX showing a lot of anxiety and fear, which again happens near bottom. So if you're looking at, the Fed taking some kind of action, which could help launch a rally, or maybe some kind of, the Greece situation resolving itself, at least in the short term somehow, you could definitely see a big relief rally, and we know that these industrial commodities tend to rally with the stock market. So I think you're setting yourself up for a very, very impressive rally here going forward in the equities. I think it actually sets up very nicely for the fourth quarter. And I've been saying that for a while after the consolidation or pullback we've seen in equities and commodities, that probably we're going to be choppy into the fall. And then I think we'll get ready for a big rally, in the late fall into the winter.
Okay, on that note, Dave Skarica of addictedtoprofits.net, thanks so much for joining us today.
No problem. Thanks for having me.